France is changing ties with its former African colonies. France's relationship with its former colonies in Africa has always been complicated. For decades, France maintained strong economic, political, and military ties with countries like Burkina Faso, Niger, Mali, and Chad. But now, the tide has turned. These countries have officially cut ties with France, marking a dramatic shift in the region's geopolitics. So what does this mean for France? How is this breakup affecting its economy, its security, and its place in the world? Let's dive in. The end of an era. To understand the significance of this breakup, we need to look at the history. France's colonial empire once spanned vast territories in Africa, and even after independence, France kept its influence through a system known as France-Afrique. This included economic control, military presence, and cultural dominance. But in recent years, anti-French sentiment has been growing across Africa. Protests, coups, and political shifts have led to a wave of countries breaking away from France. Burkina Faso, Niger, Mali, and Chad have all taken steps to cut ties, expelling French troops, ending military agreements, and even canceling trade deals. This isn't just a symbolic move, it's a seismic shift that's already having real-world consequences for France. Economic fallout. Let's start with the economic impact. France's economy has long relied on its former colonies for resources, trade, and investment. But now those ties are unraveling, and the effects are starting to show. Take uranium, for example. Niger is one of the world's largest producers of uranium, and France depends on it to fuel its nuclear power plants, which generate about 70% of the country's electricity. With Niger cutting ties, France has lost access to a critical resource. Sure, France can turn to other suppliers like Canada or Australia, but it's going to cost more, and those costs will eventually trickle down to French consumers and businesses. Then there's oil. Chad is a major oil producer, and French companies like Total Energies have billions invested in its energy sector. If Chad follows through on its threats to nationalize French assets, it could disrupt France's energy supply and hurt its economy. Higher energy prices would ripple through French industries, increasing production costs and reducing competitiveness in global markets. And let's not forget trade. France imports agricultural goods like cotton and livestock from these countries. With ties cut, supply chains are being disrupted, leading to higher costs for French manufacturers. This isn't just a short-term problem, it's a long-term challenge that France will need to address. French investments in jeopardy. French companies have massive investments in these countries, particularly in sectors like energy, mining, and telecommunications. For example, Orange, one of the largest telecom companies in the world, operates across Africa. Bolloré, a logistics giant, controls ports and railways. And French mining companies extract gold, uranium, and other minerals. But now, these investments are at risk. Countries like Mali and Burkina Faso have already started expelling French companies, and others could follow suit. This isn't just about lost profits, it's about France's shrinking global footprint. As French businesses pull out of Africa, other powers like China, Russia, and Turkey are stepping in to fill the void. This could have long-term consequences for France's economic influence in the region. Energy and resource security. Energy security is another major concern. France's nuclear plants need uranium, and its industries need oil. With ties cut to Niger and Chad, France is facing a potential energy crisis. Sure, France can turn to other suppliers, but it's going to come at a higher cost. And in the short term, higher energy prices could hit French industries and consumers hard. But it's not just about energy. France relies on these countries for other critical resources, too. For example, Mali is a significant producer of gold, and Burkina Faso has untapped mineral reserves. Losing access to these resources could disrupt French industries and increase production costs. This is a wake-up call for France to diversify its resource supply chains and invest in alternative energy sources. Security challenges. Now, let's talk about security. The Sahel region, which includes countries like Mali, Niger, and Burkina Faso, is a hotspot for terrorism, organized crime, and political instability. France has been a key player in maintaining security here through military interventions like Operation Barkhane. But with ties cut, France has been forced to pull out its troops. This has created a power vacuum, allowing groups like ISIS and Al-Qaeda to grow stronger. And instability in the Sahel could lead to a surge in migration to Europe, putting even more pressure on France's borders and social systems. Imagine the political and economic strain of dealing with a sudden influx of migrants while also trying to combat terrorism at home. This is a security nightmare for France. Geopolitical influence and soft power. France's influence in Africa isn't just about money, it's also about culture and diplomacy. French is widely spoken in these countries, and France has used this to maintain soft power. French cultural centers, scholarships, and educational programs have created a network of Francophone elites who often maintain close ties with France. But with ties cut, this influence is fading. Countries are turning to other global powers like China, Russia, and Turkey for investment, military support, and infrastructure projects. France is losing its seat at the table, and its voice in global affairs is growing weaker. This is a significant blow to France's geopolitical influence, not just in Africa, but around the world. Can France adapt? So, can France survive this breakup? The short answer is yes, but it won't be easy. France's economy is diverse and resilient. It's part of the European Union, which gives it access to a massive internal market. French companies are global leaders in aerospace, luxury goods, and technology. And France has trade relationships with countries all over the world. But adapting will take time and effort. France might need to shift its focus to other regions, invest in new energy sources, and rethink its foreign policy. For example, it could strengthen ties with emerging economies in Asia and Latin America, or double down on renewable energy to reduce its dependence on imported resources. The new reality. The breakup between France and its former African allies is a turning point in history. It marks the end of an era and the beginning of a new chapter in France-Africa relations. For France, the challenges are real. Economic disruptions, security threats, and a loss of global influence. But this is also an opportunity for France to rethink its role in the world and build new partnerships based on mutual respect and equality. So, what do you think? Can France adapt to this new reality? And what does this mean for the future of global politics? Let me know your thoughts in the comments below. Don't forget to like, share, and subscribe for more deep dives into the world of geopolitics and economics. Thanks for watching, and I'll see you in the next video.